A sitting member of Congress just put up to $1 million into call options on a stock trading well off its highs, with a strike price and expiration date that lines up almost to the day with another massive bet she made on a completely different company. That's not a coincidence. That's not some random retirement account decision. That's someone with access to information you and I will never see, making two very specific, very timed moves in the same breath. And by the end of this video, you're going to know exactly which stocks those are, why they matter, and whether Ticker Hawk thinks you should follow that money or walk in the opposite direction. If you want a weekly breakdown of what people with real access are actually buying, hit subscribe now so you don't miss the next one, because some of what's coming up today is going to surprise you, and one of these calls might not be the one you're expecting. And this isn't a one-off either. This kind of pattern shows up over and over once you start actually reading these disclosure filings instead of just skimming the headlines about them. And that's exactly why Ticker Hawk goes through them every single week, instead of waiting for someone else to summarize the interesting parts. Before we get into the names, here's why this even matters. Congress has tried for years to ban lawmakers from trading individual stocks. There's a bill sitting in the Senate right now aimed at doing exactly that, and it's expected to go nowhere, mostly because it got loaded up with unrelated provisions that make it easy to kill while still letting everyone say they tried. Even if it somehow passed anyone already holding a stock would be allowed to keep it. So for now, and probably for a long while, these trades keep happening in plain sight, disclosed after the fact, sitting in public filings that almost nobody bothers to read. Ticker Hawk reads them. And what's showing up in the filings right now points to 4 stocks worth talking about, split between names to buy and at least one name Ticker Hawk thinks you should stay away from, no matter how good the headlines sound. Let's start with a name most casual investors have never heard of, BWX Technologies, ticker BWXT. This is the company that builds the nuclear reactors that power every single Navy submarine and aircraft carrier in the U.S. fleet. Not some of them, all of them. There is no second supplier the Pentagon can call if BWXT has a bad quarter. The security clearances and engineering qualifications needed to even attempt to compete with this company take decades to build from scratch, which means BWXT sits on something close to a legal monopoly inside one of the most strategically important industries on the planet. 2 different lawmakers have been buying this stock, one of them 4 separate times before following up with a single purchase worth somewhere between $200,000 and $900,000. Her committee assignment controls federal nuclear research funding, and her very first purchase in this name happened on the exact same day BWXT announced a contract worth over $1.4 billion with the Navy's nuclear propulsion program. That timing is not something you can wave away as luck. The other buyer sits on the subcommittee that specifically oversees Navy shipbuilding, and BWXT builds the reactors that go inside those ships. You will rarely find a cleaner overlap between a committee seat and a stock pick than that one. Beyond the political angle, the fundamentals hold up on their own. Global nuclear demand is expanding fast, with Poland, Bulgaria, Sweden, and the UK all rolling out new reactor programs, and Canada just unveiled a massive nuclear strategy of its own. BWXT has raised its dividend for 10 straight years, and it's sitting on real cash. Ticker Hawk's take. This is a buy, and it's a buy you hold for years, not weeks. It's boring, it's essential, and boring and essential is exactly the kind of stock that quietly compounds for a decade, while everyone else chases whatever's trending that week. Here's a question for you, and drop your answer in the comments. Would you rather own the company building the weapon, or the company that keeps the weapon from being built wrong? Because the next stock on this list is the second one, and almost nobody outside the semiconductor world is talking about it. That company is Entegris, ticker ENTG. If BWXT is about hardware, Entegris is about precision. They make the specialty filters, chemicals, and contamination control materials that keep microchip factories clean enough to actually function. Modern computer chips have features measured in single-digit nanometers, so one microscopic stray dust particle landing in the wrong spot can ruin an entire wafer worth thousands of dollars. Entegris sells the exact products that stop that from happening, and here's the part that makes this stock genuinely interesting for the long haul. Their margins go up almost automatically as chips get smaller and harder to manufacture. Every time a chip shrinks, it requires more process steps, more complex chemistry, and more filtration points along the way, and Entegris gets paid more per chip regardless of whether total global chip volume even grows that year. That's a nice curve to be sitting on. Congress has been buying this one too, and the interesting name behind the trade isn't someone sitting on a semiconductor-focused committee. It's a lawmaker who spent years chairing Homeland Security and Foreign Affairs, and now co-chairs a high-tech caucus focused on export policy. Right now, export controls are arguably the single biggest swing factor for the entire chip supply chain, more than interest rates, more than demand, because one policy change in Washington can rewrite who's allowed to sell what to whom overnight. That's exactly the seat this lawmaker has sat in for years. He's also not running for re-election, which means whatever he's doing with his own money right now isn't about optics anymore. It's just a bet. Ticker Hawk's take, Entegris, is a buy. It's a picks and shovels play on an industry that isn't shrinking no matter which chipmaker wins any given year, and the margin structure does a lot of the heavy lifting for you without needing a perfect forecast. Quick gut check before we move on, because it matters here more than it usually does. Does it change how you feel about a stock, knowing that a lawmaker with access to defense budget conversations bought it right before a major contract announcement? It should at least make you curious, even if it shouldn't be the only reason you ever buy anything. 2 down, and both of them are quiet. Unglamorous buys most people scroll right past. Neither one is going to trend on social media, and that's kind of the point. The stocks that make for the best screenshots rarely make for the best 5-year holds, and the stocks that quietly show up in a nuclear propulsion contract or a semiconductor filtration order rarely make for exciting screenshots. That mismatch is exactly where patient money tends to win. But the next 2 names are where this video gets a lot more interesting, because Ticker Hawk is about to disagree with the crowd on one of the most talked about stocks in the entire market right now, and then turn around and back the one flying under the radar. Let's talk about the trade that opened. This whole video. Intel, ticker INTC, just had a genuinely strong quarter, and it's easy to see why people are excited. Revenue growth was the fastest it's been in over 15 years, up 25%, and they beat their own guidance by $1.8 billion. Adjusted earnings per share more than doubled what Wall Street expected going in. Their AI and data center revenue jumped 59% year over year. And their foundry business, where Intel manufactures chips for other companies instead of only designing its own, is finally starting to look like a real strategic asset instead of the money pit it's been for years. The US government took a 10% stake in Intel worth over $11 billion, and Nvidia and SoftBank poured billions in right alongside Washington. That's a genuinely unusual amount of institutional and government firepower lined up behind a single stock, and it's exactly why a very high-profile member of Congress bought 200 call options with a $50 strike price expiring in March of 2027 in a position worth somewhere between $1 and $5 million. Here's the problem, and it's the reason Ticker Hawk is calling this one an avoid for now instead of jumping on the bandwagon. Government-backed turnarounds are messy by nature. Intel has promised to come back before and missed more than once, and longtime shareholders have heard next year is the year for a long time now. The foundry business is enormously capital intensive. Building leading-edge chip factories costs tens of billions of dollars, and that money has to come from somewhere, which historically has meant more shares outstanding or more debt piling up on the balance sheet. A 10% government stake also isn't free money with no conditions attached. It comes with political strings, and political priorities can shift with every single election cycle in ways a business plan can't always absorb gracefully. One strong headline, quarter off a depressed base, is not the same thing as a business that's actually earned its valuation back after years of underperformance. Ticker Hawk isn't saying Intel can never work out, plenty of turnarounds do eventually land. It's saying the risk reward right now favors watching from the sidelines until the foundry numbers prove themselves for a few more quarters in a row, instead of buying in just because a politician did. If Intel posts another strong quarter with real, named foundry customers signing on, that changes the picture, and Ticker Hawk will say so on this channel the moment it happens, not after the fact. If you've made it this far, you already know this channel isn't going to tell you every hyped up name is an automatic buy. And honestly, that's the whole point of this video. So if that kind of straight talk is useful to you, actually helps this reach more people who are tired of the hype and moon emoji version of stock content. Now let's get to the stock Ticker Hawk actually likes more than Intel. And it's the same lawmaker who bought those Intel calls making an almost identical trade in a completely different sector. That stock is Uber, ticker Uber. The same politician bought 200 call options with that exact same $50 strike price and the exact same March 2027 expiration date, this time in a position worth roughly $500,000 to $1 million. She represents the district that's Uber's home base, and it also happens to be the exact city where the first robotaxi deployments are scheduled to land. That's about as direct a line as you're going to find between a lawmaker's home turf and a company's future roadmap. But forget the politics for a second and look at the actual business, because the fundamentals here are doing plenty of talking on their own without any help from Washington. Uber's gross bookings jumped 22% last quarter to $58 billion, beating the high end of their own guidance, and total trips hit 3.87 billion for the quarter. Free cash flow came in at $2.8 billion in that same quarter alone. pushing their trailing 12-month free cash flow past the $10 billion mark. People assumed Uber Eats would quietly fade away once the pandemic ended and everyone stopped ordering delivery out of necessity. And instead, delivery revenue is growing 26%, faster than the core rideshare business itself. Here's the part most people are completely missing, though. The single biggest cost inside Uber's entire business model is the human driver sitting behind the wheel. Take that cost out of the equation, even partially, and the margin profile of this company changes in a way that most investors haven't fully priced in yet. That's exactly why the regulatory story matters so much right now. Congress introduced legislation giving federal regulators clear authority over autonomous vehicles. Instead of leaving it to a patchwork of states, regulators just approved the first ever commercial robotaxi deployment exemption, and there's now a real push toward one unified national safety standard. Uber is spending over $1 million a quarter lobbying on exactly this issue, which tells you how much they think is riding on it. When you buy Uber today, you're buying a highly profitable cash-generating marketplace at a stock price that's still sitting well off its highs, plus what amounts to a free call option on the driverless future that the market isn't fully pricing in yet. Tickerhawk's take: Uber is a buy, and it might genuinely be the best risk-reward on this entire list, because you're not paying up for a dream here. You're paying a reasonable price for a real profitable business with a lottery ticket attached to the side of it for free. One quick note before the wrap-up, because this matters more than most people think. None of this means you should mirror these position sizes dollar for dollar. A lawmaker putting $1 million into call options might represent a tiny sliver of a much larger portfolio, while that same dollar amount could be someone's entire life savings. Tickerhawk isn't in the business of telling you exactly how much to put where. That's a personal call based on your own situation, your own timeline, and how much volatility you can actually stomach without losing sleep. What these filings are useful for is direction and conviction, not a precise blueprint. Use them as one input among several, not as a substitute for your own thinking. That's also why this list has both buys and an avoid sitting side by side, because following the trade, blindly, without asking why would have put you in Intel right alongside a stock like BWXT, and those two ideas do not deserve equal confidence right now. So here's where Tickerhawk actually lands after going through all four of these. BWXT and Integris are quiet, monopoly-adjacent compounders you can hold through the noise for years without checking the price every day. Uber is a cash machine trading like it's still figuring itself out when the actual numbers say otherwise. And Intel is the one everyone's excited about for arguably the wrong reasons right now: a stock riding political tailwinds and one hot quarter that hasn't proven yet it can sustain itself through a few more earnings cycles. That's 4 stocks, 3 buys, and 1 name. Tickerhawk is deliberately staying away from until it proves it deserves the hype instead of just the headlines. And honestly, that split says a lot about how selective you need to be right now instead of buying whatever crosses your feed with a rocket emoji attached. Which one of these would you have? Picked differently? The reactor company, the chip filter company, the rideshare turnaround? Or are you actually more bullish on Intel than Tickerhawk is here? Say it in the comments, because the next video is going to dig into a completely different corner of the market that almost nobody's watching closely yet. And if you don't want to miss it when it drops, this is a good time to go ahead and subscribe.